Assalamu alaikum wa rahmatullahi wa barakatuh. I welcome you to Citywide Group of Schools e-learning program. The subject is financial accounting and for senior secondary school 2. This is the third week of the third term of this academic session. The last period we were on the solution of partnership, and I believe we have done justice to the topic because we are able to look at the solution of partnership, where we had profit on dissolution, where we had losses on dissolution, where we had partners bringing in cash to settle their deficits, as well as where we have the partners taking over the properties of the business. Now, today we are moving to another new topic and a new aspect of the financial accounting. And the topic is accounts of non-profit making organization. Accounts of non-profit making organizations. And our subtopic is the area where we are going to be looking at the receipts and payments account. But to start with, let us look at what we mean by account of non-profit making organization. Commercial and industrial organizations are set up principally to make profits. Commercial and industrial organizations are set up principally to make profit. So the account that we have been talking about before were account of profit making organization. But today we need to look at the one of those organizations that are not established to make profit. Now, account of non-profit making organization. Commercial and industrial organizations are set up principally to make profit, but non-profit making organizations like clubs, societies, and charitable bodies are not profit oriented. That is, while commercial and industrial organizations make profit, organizations such as clubs, societies, charitable bodies are not profit oriented organizations. They are set up to provide welfare services to their members, as well as promotion of group of activities. That is, clubs, societies, charitable bodies, which form non-profit making organizations, are set up to provide welfare services to their members, as well as promotion of group of other activities. Examples of non-profit making organizations are Muslim Societies of Nigeria, which is known as MSSN, the NASFAT Association, the Ikoyi Club, the Ajorosun Club of Ibadan, etc. What are the characteristics of non-profit making organizations? Features of non-profit making organization. 1. Non-profit making organization are not set up to make profit. That one must be noted, that they are not set up to make profit. Funds are available from members' contributions. So they make the fund they are spending are from where members' contributions. So the members contributed the funds for the organization. Then they provide welfare services to their members. Their aim is to provide welfare services to their members. They do not distribute their surplus as dividend. In profit-making organization, especially the companies, their surplus, which was known as profit, were meant to be distributed as a dividend. But when we are talking about non-profit making organizations, their surplus are not meant to be distributed as a dividend. What are the accounts to be prepared by non-profit making organizations? What are the accounts to be prepared by a non-profit making organizations? Well, these are some of the accounts to be prepared. 1. Receipt and payment account. 2. Bar trading account. 3. Income and expenditure account. 4. Subscription account. 5. Statement of affairs. All these accounts are going to be looking at in this topic. So we are going to be discussing all those accounts in this new topic, which is a non-profit making organization. Account of non-profit making organization. To start with, receipt and payment account. Receipt and payment account. This is the account that shows the summary of the cash book over a particular period of time. This is the account that shows the summary of the cash book of a non-profit making organization over a particular period of time. It is the equivalent of cash book of a profit making organization. The debit side shows details of opening cash or bank balance and all receipts of the by the organization, while the credit side shows all cash or bank payments and their closing balances. What we are talking about the receipt and payment account is that it is like the cash book of a profit making organization, and on its debit side we have the details of the opening cash or bank balance and all the cash received by the business or by the organization, while on the credit side we have the cash or bank payment by the organization and the closing balance of the account. Features of receipt and payment account. Features of receipt and payment account. What are the characteristics of the receipt and payment account? They are: receipt and payment account is a real account. It's a real account. It's a prime book. Receipt and payment account is a prime book. It's a summary of cash and check transaction of a club. It has opening and closing balances. It records both capital and revenue expenditures. It records both capital and revenue expenditure. Its closing balance is transferred into the balance sheet. Its closing balance is transferred into the balance sheet. Its records are supported by source documents. Its records are supported by source documents. It is used by not-for-profit making organization. What are its limitations? What are the limitations of receipt and payment account? The limitation of receipt and payment account include: 1. There is no distinction between capital and revenue items. That is, the items in the receipt and payment account are not classified into revenue or capital items. It does not disclose profit or loss on sale or disposal of fixed assets. When fixed asset is sold or disposed, the receipt and payment account will not show us whether there is profit made or loss made on the disposal of such an asset. Receipt and payment account does not disclose accruals and prepayments. It does not disclose accruals and prepayments. Number 4, non-cash items are not disclosed. That is, non-cash items that cannot be that are not related to cash are not shown on the receipt and payment, such as the bad debts, depreciation. You cannot find them on the receipt and payment account. Then, receipt and payment lacks comparability between successful years, as income and capital items are not separated. Since income and capital items are not separated, then you cannot compare the receipt and payment of a year with another year. So those are the limitations of a receipt and payment account. From there, let us look at the format of a receipt and payment account. Receipt and payment also follows the principle of double entry. Therefore, it has debit and credit sides. So receipt and payment account, denomination naira. On the debit side, the amount, the income into the business. While on the credit side, we have the expenditure of the organization. So on the debit side, we have items such as balance brought forward, donations, subscriptions, dance receipts, annual dinner. Then on the credit side, we have expenditure such as rent, wages, postages, stationery, honorarium, meeting expenses, etc. To have a better look at how to prepare a receipt and payment account, let us have an illustration. So illustration 1. From the following, prepare a receipt and payment of Ajorosun Club for the year ended 31st December 2009. From the following, prepare a receipt and payment account of Ajorosun Club for the year ended 31st December 2009. Paid for, so the payments are rent 5,000 naira, transport 4,000 naira, wages 6,800 naira, supplies for refreshment 8,500 naira, printing and stationery 3,000 naira, repairs 1,200, and as well as the salaries, which was 10,000 naira. Then the receipts of the organization were donations 6,000 naira, refreshments 12,000 naira was realized from refreshments, tickets realized 1,000 naira. At the beginning of the year, we have cash in hand of 1,800 naira, and at the end of the year, we have cash in hand of 2,800 naira. Now from there, let us look at how to prepare the receipt and payment account. Receipt and payment account, debit, credit side. Our denomination is naira. So we have our balance brought forward of the cash as at the beginning, which was 1,800 naira on the debit side. We have subscription of 20,000 naira. We have donation 6,000 naira, refreshment 12,000 naira, and ticket of 1,000 naira. So on the debit side or receipt side, we have 41,300 naira. Then on the expenditure side, which is the credit side, we have the rent 5,000 naira paid, transport 4,000 naira, wages 6,000 naira paid in 6,800 naira paid in cash, supplies for refreshment 8,500 naira paid in cash, printing and stationery 3,000 naira paid in cash, repairs 1,200 naira paid, and salaries of 10,000 naira. So since the amount realized, that is the receipt side, which was 41,300 naira, was greater than the payment side, so we deduct the payment side from the receipt side, and we have the balance carried down of 2,800 naira, which will be brought forward to start to the next accounting period. That is the convenient point for us to round off our class on our discussion on introduction to account of non-profit making organization, as well as how to prepare receipts and payment accounts. Assalamu alaikum wa rahmatullahi wa barakatuh.